to this week's Manager's Thoughts at Synergy Asset Management. This is Kelly, and it is October 28th, 2022, and I'm super excited to share with you this week's market update. Alrighty, so moving into a market update of what's going on this week, what went on this month. By end of the day, Thursday, October 27th, for the month of October, the NASDAQ was up pretty much flat, just up half a percentage point. The S&P was up about 4.3% for the month. The Dow Jones was up about 7.8%, and big surprise, the US 10-year Treasury yield was up the most, up over 10%. So this week specifically, though, was largely driven by corporate earnings coming out for a lot of companies for Q3 2022. They were largely choppy, really just depending on the industry, and especially in the tech world, they were really poor. And so they cut forecasts for sales, and the earnings were just barely meeting estimates overall. Specifically, Amazon and Meta were down the most, down both double digits at some point this week in their stock price. And so next week, we're really looking forward to hearing what the Fed has to say. They'll be meeting on Tuesday and Wednesday we'll be getting a Fed rate hike decision. The consensus is pretty much 75 basis points all around, but their sentiment moving forward and also their aggressiveness in the December meeting will be really important to listen to as well. So just a little more into depth about some of the corporate earnings we were watching this week. For Meta, they announced their earnings on Wednesday. They missed estimates of $1.90 and EPS came in at $1.64. So a huge miss on their part. This was largely because of the big costs going into the metaverse, right? So Zuckerberg is really just dumping so much investment into the metaverse, hoping that it will someday pay off. And also we saw the daily active users on the platforms of Facebook, Instagram, a bit lower than expectations too. So the stock price, as you can see in that chart, really slumped about 20-30% throughout the week. So a huge disappointment for Meta. For Amazon, they did beat their earnings estimates, but they cut their sales forecast looking at a kind of rough holiday season ahead, and the stock price fell from about the 120, 110 range this week to below 100. Next was Apple. They beat their earnings estimates too, but they're really struggling to meet the strong demand for their iPhones, which investors took as a good sign. So they announced the earnings Thursday, and the stock was up Friday. For Microsoft, they also beat earnings estimates, but their net income was still about 14% lower than Q3 last year, so still struggling, still not in a good place. So overall, tech earnings, not great. Another deal we've been following is the Twitter deal with Elon Musk, and so this week, on Thursday, the deal finally closed. So Elon took Twitter private at $54.20 per share and has already fired the CEO and the CFO of the company. So now that they're private, can't really watch them too closely anymore, but just interesting to see. Moving into more of the economic data that's coming in this week, we got Q3 GDP growth on Thursday, and so you can see came in at 2.6% quarter-over-quarter growth, much higher than expectations of 2.2%. So this is really good news for our economy's health, that we're growing, we're doing well, but this could be negative if the Fed sees this and reacts a little more aggressively in their coming rate hikes in November and December. On Tuesday, S&P came out with their Case-Shiller Index for August. This said that home prices were only about 13% higher for the month of August than August 2021. So slight slowdown in home price growth compared to the 15.6% year-over-year growth in July. And this 2.6% deceleration was actually the quickest slowdown in price growth in the index's 35-year history. And so this is largely because of the rising interest rates and just the current economic conditions. On top of that, we've been watching the UK's economic conditions with their double-digit inflation and a struggling bank. And so just after about 45 days in office, the UK Prime Minister stepped down this week, Liz Truss, and she was citing that she was unable to meet her conservative political ambitions given the current economic turbulence in the UK. And so much of the UK's financial system was in distress recently, as their pension plans have large positions in gilt yield derivatives. And so because of the sharp rate increase, you can see in September right there that a lot of their derivatives in their pension plans were really stressed. So huge economic turbulence in the UK. As always, Synergy Asset Management is constantly monitoring the news and economic data to best manage each portfolio per its mandate and its nature to best take care of our clients. So we're always looking at corporate earnings, the Fed, interest rates, and geopolitical events as we are monitoring our portfolios and managing them for the best of our clients. Thank you for tuning into our Manager's Thoughts update this week, and we look forward to providing another update next week.